Welcome. In this video is Xcn coin price drop over. We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully examine the chart, it is possible to observe that, according to the Elliott wave theory, the price movements are progressing in a very regular and structural pattern. As of now, the market is in the second wave phase, and from a technical analysis perspective, the third wave is expected to begin after the completion of this correction phase. According to Elliott theory, the third wave is generally known for being the strongest and longest lasting. Therefore, a remarkable and accelerated rise in the price can be expected with the start of this movement. If the price turns upwards after the completion of the second wave, the third wave targets are usually calculated based on Fibonacci ratios. In this context, the 1,618 level is the first strong target, while the 2,272 level can also be considered as potential if higher momentum is captured. These ratios are projections of the first wavelength multiplied by Fibonacci coefficients and are considered reliable target zones by many experienced technical analysts. Looking at the current price action, we can see that the second wave is about to be completed by forming a healthy bottom. This means that the ground may be being prepared for the start of an upward momentum in the market. In addition, the fact that the bottom level formed at this stage remains above the starting point of the first wave is of great importance for the wave structure to remain valid. When the current structure is analyzed, as long as the price continues to stay above this critical level, the validity of the Elliott wave scenario is maintained, and upside targets remain technically on the table. If the price starts a new upside attack after completing the second wave correction, this would be a very strong signal that the third wave has started. According to Elliott theory, the third wave is the most decisive part of the market, and the one in which participants gain the most confidence. Therefore, a rise in the third wave represents a strong rally period, not only in terms of price, but also in terms of investor psychology. Price movements at this stage can be extremely remarkable both in terms of volume and momentum. Moreover, the targets of 1,618 and 2,272 in the third wave are not only theoretical projections, but also levels that have been tested and worked frequently in past market cycles. The frequent use of these ratios in technical analysis increases traders' confidence in these levels and makes them important resistance or profit-taking points. Therefore, increased investor interest as the price moves towards these areas may further accelerate the positive pricing process. One of the most positive aspects of the current structure is that the price has not yet started the third wave. This means that the market has yet to realize its potential upside, which presents a significant opportunity for investors who take early positions. This is because the third wave usually contains much more earning potential than the first wave. In this context, the current correction is not a risk, but rather an opportunity. In particular, the third wave, which starts with a reversal from strong support, has the potential to bring rapid gains in a short period of time. Of course, one of the basic principles of Elliott wave analysis is that the second wave should not go below the initial level of the first wave. This rule is important for the wave structure to maintain its technical validity. However, in the current outlook, the price manages to stay above this level and continues to react from support. This is an indication that the wave structure is healthy and the preparation for the third wave is technically favorable. If the price continues to hold above this strong support level, there will be an important basis for the transition to the third wave in the coming period. The fact that it is currently in the second wave process can also be interpreted as a period of preparation for a new bullish wave rather than a retracement for the market. But we cannot decide the analysis only with the Elliott wave. Let's look at other metrics. Keep watching. When we take a detailed look at the chart structure, we see that the price movements are shaped in a very familiar and promising pattern for investors. Especially when recent price developments are analyzed, the formation of a W pattern is clearly visible. This pattern is often referred to as a double bottom in technical analysis, and usually signals the end of a downtrend and the beginning of a new uptrend. In the current situation, the price action is located at the second bottom of the pattern, which is a very important threshold for a possible upside breakout. According to the logic of the W pattern, the first low represents a strong downward correction of the price, while the subsequent rebound moves the price towards the top. However, the resistance encountered there leads to a retracement. This retracement often creates a second bottom, usually positioned either slightly above or very close to the first bottom. A similar situation is currently unfolding. The price has reached the second bottom and has the potential to gather strength and start an upward movement. This is a critical stage that traders are closely monitoring and evaluating to take a position. If the second bottom is successfully tested and strong buying comes from this region, it seems technically quite possible that the price will start an upward attack. In particular, the increase in volume that will occur at this level will contribute to the rise to be even stronger and more determined. Because in double bottom patterns, the second bottom acting as support and pushing the price upwards is an important signal supporting the validity of the pattern. If an upward breakout from this area occurs, investors will both confirm that the technical pattern is working and have a strong expectation of reaching higher price levels. In addition, the second bottom is usually a level where buyers come back on the scene and sellers lose their strength. In other words, a reversal in this area marks a psychological breakpoint in the market, and prices may move upwards acceleratedly from this point. In this process, with the completion of the pattern, the target zone is usually based on the starting point of the pattern, that is the peak level. Once this level is crossed, even higher resistances can be tested in turn and new highs can be established. If the pattern works successfully, the price usually not only reaches the initial bullish high, but also tends to break through it and move higher. This is a very positive scenario, both technically and in terms of investor psychology. This is because such patterns indicate that the market has broken out of its downtrend and is now gaining momentum in the direction of buying. In addition, the formation of such structures may also indicate that confidence is being restored in the market and larger players are starting to enter the market. As of the current position, the price trying to find equilibrium at the second bottom level can be considered a very promising development. Such consolidation processes are critical in determining the direction of the price. If the price finds strong support at this level and gains upward momentum, it can be expected to successfully complete the pattern and start moving towards potential targets. This scenario may also present an important opportunity for traders to strengthen their positions. A positive breakout at the second bottom of the pattern could represent not only short-term upside, but also the beginning of a strong trend in the medium to long term. Especially in the uptrends that follow such patterns, the momentum increases along with the volume, which can lead to rapid jumps in the price. When we take a look at the chart in general, we can see a structure that is particularly noticeable on the RSI indicator. The RSI indicator is one of the most powerful technical tools to help traders understand the momentum on the market. The downtrend line that is currently forming on this indicator is very much in line with the price action. However, technical signals are starting to emerge that we are nearing the end of this downtrend. This could be the first signs of a positive turnaround in the market. This falling trend line on the RSI has been tested several times in the past and has served as a strong resistance. In other words, every time the price tried to rebound, the RSI touched this trend line and then moved down again. However, in technical analysis, such repeated contacts signal that resistance lines are weakening and are now ready to be broken. This is because the more resistance levels are tested, the more likely they are to be breached. Therefore, the chances of a breakout of this downtrend on the RSI look quite strong at the moment, and a breakout could lead to a significant change in the direction of the market. In this context, a break of the RSI upwards from this trend line would signal a positive momentum shift in the market. This is because the RSI can work as a precursor to price movements. RSI trends are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.